In today's video, we are covering the top 21 tricky accounts payable journal entries that you can expect during your interview. Video is in interview format, so you can get the idea of what to expect during your actual interview. So without any further ado, let's get started. Pass the journal entry for purchase of raw materials worth 1 lakh rupees on credit from a vendor with 18% GST. Also explain treatment of input GST.
Alright, so for raw materials purchase with GST, the entry would be raw materials debit 1 lakh rupees, GST input credit debit 18,000 rupees, and accounts payable credit 1 lakh 18,000 rupees. The input GST treatment is important here. Since we can claim this as input tax credit, we record it separately as GST input credit, which becomes recoverable from the government when we file our GST returns.
Good understanding of GST treatment. You receive a vendor invoice for office supplies 25,000 rupees plus 18% GST. Entry is yet to be paid. Pass the journal entry.
When we receive the invoice but haven't paid yet, we need to book the liability. The entry would be office supplies expense debit 25,000, GST input credit debit 4,500, and accounts payable credit 29,500. This creates the liability in our books even though cash payment is pending.
Correct. Here's an interesting scenario. Goods worth 40,000 rupees are received. GRN is done, but the vendor invoice is still pending. What is the journal entry at GRN stage?
This is a common situation in practice. When we receive goods but the invoice is pending, we need to recognize the liability based on the goods received note. The entry would be inventory or raw materials debit 40,000 and goods received not invoiced credit 40,000. This temporary account helps us track goods received but not yet invoiced.
Excellent. Invoice received from a vendor for 80,000 rupees, but TDS of 8,000 rupees is applicable. What entry will you pass at the time of invoice booking?
When TDS is applicable, we book the full invoice amount but also show TDS as recoverable. The entry would be expense account debit 80,000, then we credit accounts payable 72,000 and TDS recoverable credit 8,000. Wait, actually, TDS recoverable should be a debit since it's an asset. So, expense account debit 80,000, TDS recoverable debit 8,000 and accounts payable credit 88,000. No, that doesn't balance. Let me reconsider.
Take your time, think through the logic of what's happening.
Right? So, the vendor invoices for 80,000 but will deduct TDS when paying. The entry should be expense account debit 80,000 and accounts payable credit 80,000. The TDS treatment comes later during payment, not at invoice booking stage.
That's correct. TDS is handled at payment time, not invoice booking. Now, advance of 50,000 rupees paid to vendor for services. Services will be delivered next month. What is the journal entry now and what will it be after invoice is received?
For the advance payment, advance to vendors debit 50,000 and cash or bank credit 50,000. When the invoice is received next month, let's say the invoice is for 50,000 exactly, we would debit the expense account 50,000 and credit advance to vendors 50,000 to clear the advance. If the invoice amount is different, we'll adjust accordingly with additional payment or refund.
Good thinking. Vendor invoice booked wrongly twice, that's a duplicate invoice. What journal entry will you pass to reverse the duplicate?
To reverse a duplicate invoice, I need to pass the exact opposite of the original entry. If the original was expense account debit and accounts payable credit, then the reversal would be accounts payable debit and expense account credit for the same amount. This will bring both the expense and payable balances back to the correct amount.
Perfect. Freight charges of 10,000 rupees incurred on purchases and paid by company. Vendor will not reimburse. How will you record it?
Since the freight is related to purchases and won't be reimbursed, it should be added to the cost of purchases. The entry would be freight inward or purchase freight debit 10,000 and cash or bank credit 10,000. This freight cost will ultimately increase the cost of goods purchased.
Correct. You receive a credit note of 12,000 rupees from a vendor for excess billing in last month. What journal entry is passed in AP?
A credit note reduces our liability to the vendor. The entry would be accounts payable debit 12,000 and it depends on what the excess billing was for. If it was for purchases, then purchases credit 12,000. If it was for expenses, then the respective expense account credit 12,000. The credit note essentially reverses part of the original invoice.
Good reasoning. Here's a foreign exchange scenario. Foreign vendor invoice received for $2,000. At booking date rate is 83 rupees per dollar. At payment date rate is 84 rupees per dollar. Past journal entries for both dates and FX loss.
At booking date, $2,000 at 83 rupees per dollar equals 1,66,000 rupees. The entry would be expense account debit 1,66,000 and accounts payable credit 1,66,000. At payment date, the rate is 84 rupees per dollar. So we need 1,68,000 rupees to pay $2,000. The payment entry would be accounts payable debit 1,66,000, foreign exchange loss debit 2,000 and bank credit 1,68,000.
Excellent handling of foreign exchange. You receive goods from a vendor, but the invoice has not been received. What journal entry is passed to recognize the liability?
This is similar to the GRN scenario we discussed earlier. When goods are received but invoice is pending, we use a temporary account. The entry would be inventory of purchases debit for the estimated amount and accrued purchases or goods received not invoiced credit for the same amount. This ensures we recognize the expense and liability in the correct period.
Right? You pay 1 lakh rupees to a vendor through bank. What is the journal entry? Assuming invoice was already booked.
Since the invoice was already booked, the liability exists in accounts payable. The payment entry would be accounts payable debit 1 lakh rupees and bank account credit 1 lakh rupees. This clears the liability and reduces our bank balance.
Simple and correct. Pass the journal entry for reversal of provision made for an unpaid invoice that was never received.
If we had made a provision for an invoice that never materialized, we need to reverse it. The reversal entry would be accrued expenses or provision credit and the respective expense account debit. Wait, that's backwards. It should be accrued expenses debit and expense account credit to reverse the original provision.
That's right. An invoice was booked for 60,000 rupees in April, but the service was cancelled in May. How will you reverse this in books?
Since the service was cancelled, we need to reverse the original entry. The reversal would be accounts payable debit 60,000 and service expense credit 60,000. This removes both the liability and the expense from our books since the service was not actually provided.
Correct. Penalty of 5,000 rupees imposed by vendor for late payment and you agree to pay it. What is the journal entry?
The penalty is an additional expense for us. The entry would be penalty expense or late payment charges debit 5,000 and accounts payable credit 5,000. This creates a new liability for the penalty amount that we need to pay to the vendor.
Good. Purchase of fixed asset, furniture worth 70,000 rupees plus GST on credit. What is the journal entry from AEP perspective?
For fixed asset purchase with GST, furniture account debit 70,000, GST input credit debit 12,600 and accounts payable credit 82,600. The GST on fixed assets can be claimed as input credit, so we record it separately from the asset cost.
Perfect. You reconcile vendor account and find an unadjusted advance payment of 20,000 rupees. How do you adjust it in books when invoice arrives?
When the invoice arrives, we need to adjust the advance against it. If the invoice is for, let's say 30,000 rupees, the entry would be expense account debit 30,000, then credit advance to vendors 20,000 and accounts payable 10,000. This clears the advance and creates liability for the remaining amount.
Excellent. You have a debit balance with a vendor, meaning advance paid is more than invoice. How do you pass journal entry for that adjustment?
If we have a debit balance, it means we've paid more than we owe, so the vendor owes us money. This should be reclassified from accounts payable to advance from vendors or vendor receivables. The entry would be Advance from vendors debit and accounts payable credit for the debit balance amount.
Right? At month end, an accrual of 30,000 rupees is to be made for a vendor service invoice not yet received. What is the journal entry?
For month-end accrual, we need to recognize the expense even though the invoice hasn't arrived. The entry would be service expense debit 30,000 and accrued expenses credit 30,000. This ensures we match the expense with the correct period.
Good. Vendor payment is made with 5% discount for early payment. Invoice was 1 lakh rupees, paid 95,000. What is the entry for cash discount?
The cash discount is a benefit we get for early payment. The entry would be accounts payable debit 1 lakh rupees, then credit bank 95,000 and purchase discount or cash discount received credit 5,000. The discount reduces our total cost.
Perfect. You find that invoice was wrongly booked under admin expenses instead of IT expenses. What reclassification journal will you pass?
For reclassification between expense accounts, the entry would be IT expenses debit and admin expenses credit for the amount that was wrongly classified. This corrects the expense classification without affecting the total expense or accounts payable balance.
Okay, next one would be vendor raised invoice including 18,000 rupees GST, but your company is not eligible to claim input GST on this. How will you record the full expense in accounts payable?
If we cannot claim input GST, then the entire amount including GST becomes our expense. The entry would be expense account debit for the full amount including GST and accounts payable credit for the same full amount. We don't separate the GST since we cannot recover it.
Excellent work. You have demonstrated strong understanding of accounts payable transactions. Your ability to think through the business logic behind each entry is impressive.
Thank you so much.
So that's it for today's video. If you want the PDF notes of this session, you can get the accounts payable ebook from my website. Link is in the description. Comment what other topics you want me to cover.